But your next guest says that Amazon may be about to take off to $4,000 or even $5,000 a share. Let's welcome in Colin Sebastian, Managing Director and Senior Analyst at Baird. Colin, good to have you on the program here. You'll forgive me for looking down. I want to read parts of your note. With the market currently focused on rotation to value, rates, reopenings, and tough e-commerce comps, we believe investors may be missing one of the most compelling subscription and quasi-subscription models within the IT sector. And there's a path to 5,000. Break it down, because you know next quarter is the quarter when they boomed. I don't know how they match those numbers.
Yeah, thanks, Brian, for having me. So I think what's missing when investors are currently very focused on the macro environment and not fundamentals is that Amazon has some really amazing long-term growth opportunities. And the stock is trading at a pandemic low in terms of valuation, as you outlined. And in terms of recurring revenues or quasi-subscription, you have the core e-commerce business, which is driven by Prime subscribers and third-party sellers that are locked into Amazon's ecosystem. And then, of course, Amazon Web Services is essentially a cloud subscription business. So all of that, it means high retention rates, low churn, low customer acquisition costs. We think this is one of the best models out there and currently does not reflect it in the valuation. Okay,
quasi-subscription. What does that mean? I see it as a subscription. If you're paying Prime every year, auto-renew on your credit card, you don't even think about it. Why quasi-subscription?
Yeah, fair question. So there are subscription elements specifically to Amazon like Prime, but really I'm talking about the whole business. So all of the spending that those Prime members make, they generate the vast majority of sales on Amazon. So they are subscribers, but a lot of the retail revenues on Amazon are not specifically subscription revenues. But we think are quasi-subscription because they are tied to those Prime members.
What's the biggest risk to your $4,000 or $5,000 price target, Colin?
Honestly, I
Besides
think
it not hitting it.
Yeah. I think largely macro. I think investors are concerned that if the growth stock rollover continues, that support levels are pretty far below where we are today. Obviously, we look at it more from a fundamental basis. Shares are trading at essentially a five-year low, pandemic period low for sure. So on that basis, we don't see it as a significant risk. We hope it gets to 4,000 this year, which is our 12-month price target. We think 5,000 is achievable. Amazon will be generating $1 trillion of volume within 3 to 4 years. And we think that's, as I said, not recognized in the current valuation.
Shepard Smith here. Thanks for watching CNBC on YouTube.